Hey there, Kristen Jacobson here. So here's a fun but sad fact for us. Most of the people that love our show are still not subscribed to our channel. Now, here is the deal that I'm going to make with you. If you can find it in your heart to click the subscribe button, I promise you that we're going to get better guests to provide deeper insights and more practical steps in the online business M&A space. So that's the deal. If you can hit the subscribe button and also put on the notifications, we'd be really, really grateful for that. And we'll make a better show for you moving forward. Now, I hope you enjoy the rest of the episode.
Hello, everyone, and thank you again for tuning in to the Digital Dealmakers podcast. I'm very excited to have a special guest with us today. We have Rachel Murphy from the Grafter. Rachel, it's been great to connect with you. I've got to say, meeting you in February this year, it was really cool to hear how passionate and enthusiastic you are about helping entrepreneurs scale. So immediately when we decided to start a podcast, Kristen and I thought Rachel's certainly top of the list to have on. So thank you for your time. I won't give an introduction. I know you can do it far better than I can. So for the benefit of our listeners, please talk us through, Rachel, your journey over the course of your career and who you are.
Of course. Delighted to join the podcast, Dom. So my background, I'll start with what I'm currently doing. So I'm currently building a business called the Grafter, and the Grafter really helps founders to grow, scale, and exit. And previously, I've built and sold a couple of different businesses. Last one was in 2020. And prior to that, my background for probably 25 years, really, was doing turnaround and transformation work for public and private sector. So I've worked for some of the big five, and I've worked across lots of different industries. I had the pleasure of working over in Amsterdam many years ago now for KPMG. Quite a varied background. But normally, if there was a problem project, whether it be people, process, or technology, I was called in to come and get something sorted. And that really, I guess that motivated me into building businesses that responded in the same way, if that makes sense.
Okay, so I guess you've got that entrepreneurial spirit, but also that structure from your corporate experience over the years. I can imagine that that's really helpful for some entrepreneurs that are maybe struggling with that, let's say. I think, from my side, I have a couple of questions that I'd love to ask you, because I think some of that information or some of the answers can really help some of our listeners who are thinking to maybe scale. As you know, I typically help businesses when they're looking to exit through sell-side M&A advisory, taking them through the whole process. And I know that you also do that as well, but you also help out before that and helping them kind of get to a position to exit. So, with that in mind, could you first tell us a little bit about the origin of the Grafter and what actually inspired you to start it in the first place?
Of course. So the Grafter was really born after I sold the second company. So when I sold Different, and Different was a design and build agency. We were building services for government and for healthcare in the UK. But I found that whole transaction tricky.
A nightmare? Okay.
An absolute nightmare. And it kind of motivated me really to take the learning and build something out that I thought was going to be useful for other entrepreneurs. The reality is, when we're building companies, we're often domain experts in the area we're working in, rather than domain experts in actually selling a business. After I sold Different, I wanted to make it easier for entrepreneurs to get their heads around when the right time was to sell, who the right potential buyer was, get a valuation of the business, but have a sounding board along the way. The rationale was that I'm not convinced that service exists. A lot of the time, entrepreneurs are approached and then they're on the back foot. 8-figure exit will allow an entrepreneur to really get ahead of that and make sure that they are in the driving seat 2 to 3 years before they want to exit. It allows us to support an entrepreneur in getting them in a really strong position to achieve that 8-figure exit.
So, your program, I guess, is around 2 to 3 years. Is that what you're saying?
Yeah, so the actual program duration is a 12-week period, but what we
Okay.
do is we encourage entrepreneurs, a minimum
Yeah.
of 2 to 3 years before they want to exit, to
Yeah.
go through this program and get their get the house in order, build
I
out
understand.
that sell pack, start to think about what makes up a data room, and what do they actually want from the sale of the business, and answer some of those fundamental questions. Because I think, if you're running your business and someone comes knocking, you're not necessarily in the best position to negotiate that deal.
Yeah. Okay. And that's super helpful. I guess kind of leading on to that, as you deal with clients or potential clients that you might work with, what are some of the immediate or unique challenges for businesses or online businesses specifically when they're aiming to scale up? What do you see there as some challenges?
So I think a lot of the challenges are around having been there, seen it, and done it before. So having access to people who have been on that journey is often a challenge for a business.
Mhm.
I think we're in a unique position at the minute around the wider economy with regards to raising money. But also, I think the access to the right sort of resources, and by that I mean, staff to help with a venture in some shape, way, or form, is proving tricky in some regards. So I think there's lots of different nuances.
The
Ambulance,
siren, is
yeah,
it that loud?
very
Sorry.
loud. Yeah, that's fine,
Uh,
mate.
Um, okay, so Rachel, when you're dealing with prospective clients that you might work with, they come and see you and they say, Rachel, I'm an online business, or I am a business that's not online as well, that's diversified a little, bricks and mortar. Um, what are some of the unique challenges that you see when they're first looking to scale?
I think that I'm not sure they're that unique, if I'm honest, Dom. So we see
Mm,
lots of the same challenges with businesses, whether it's around having that network of experienced advisors to help a business. Often, that phrase about a CEO being a really lonely role is particularly prevalent, I think, for entrepreneurs. I often think accessing the right resources at the right rates is a challenge. But I also think we've seen challenges over the last couple of years with regards to raising money, liquidity in the market. But I think lots of the businesses that we deal with are wanting to really increase revenue and drive a
mhm.
larger number. And by definition, once we help them solve that problem, the next issue is how do they deliver to that? And that's where we see challenges around ways of working, around accessing the right resource, and I think maintaining culture as a business grows. They tend to be recurring themes.
Yeah. Okay. So super helpful. So you've got, I guess, some qualitative struggles and quantitative as well. Um, I think it's interesting that you said, yeah, they're probably not that unique. They're probably all common. And I see that as well in my work. A lot of the difficulties that sellers face when they're trying to exit are often common and very kind of straightforward to solve. It doesn't matter if it's a different business. Often, if you go through a standard operating procedure or structure, you can often address those challenges immediately. You mentioned revenue and growing through that. Um, I guess what strategies have you found to be most effective in helping certain businesses accelerate their growth? And do you have any examples or case studies that you worked on recently?
So, without exception, every single business we've worked with, there has been a need to look at the strategy, and not look at the strategy from create a polished document, but from what are you really going after? How are you really executing? Do you really understand the market? Is there space in the market for what you're you're taking out, and have you engaged with the market and asked some of these questions? So we always start with that bit, and every time there's work to do. I was talking with my internal team at the Grafter today. We have actually refreshed our strategy every 12 weeks for the first year that we've been trading. And that's because the market is shifting and we're in a really flexible position as a startup business to respond to some of that need. So strategy always. And I think that lots of businesses are very good at the specific area that they've been focused on. But if you take a step back and you ask the questions around, how are they getting the stuff to market? Have they actually fully defined what their services or products are? A lot of the time that hasn't happened, and stuff has kind of snowballed for good reasons. And they've therefore started to build without some of these building blocks in place. So what we actually do with clients is we undertake something called a business 360, where we have a look at all areas of the business and we will identify where the gaps are. And from those gaps, we will then start to put some consultancy interventions in place, whether it be focused around driving revenue, or it be needing to re-architecture a technical platform, or it be, they've got a great product, but they want to go into another location or into another market. So once we've done that business 360, we can be really specific about what outcome are we going to jointly deliver as part of our engagement with them. And the outcomes that we've been working on in the last 12 months have almost all been focused around driving revenue for businesses. Probably 50% of the companies we're working with are in the healthcare space. A number of them are professional services businesses, and a number are online platforms. But it's revenue. That's the bit that people are looking for. An example, we helped a recruitment business called Coltech position their proposition completely and move it to capability as a service. And we helped them launch into the US market.
Kind of when you say, sorry, just a follow-up question.
Yeah,
when you
of
say
course.
you help change their proposition, do you mean their business model? So the way they were charging, or is it, their services as well?
Yeah, so we fundamentally changed their operating model. So changed the services away from just putting bums on seats to actually owning part of the outcome, and therefore taking some of the risk. And we had to reposition the commercial models. We had to do some testing around landing messages for the UK and the US market. We actually had to take those services out to market and see, what the response was. So over a 5-month period with Coltech, we generated 750 grand of net new business and 2 million in the pipeline across the UK and the US. So a huge achievement in a really short period of time. We've done another piece of work with a intelligent automation consultancy in the UK, and the business is called E18. And E18 were doing a lot of pre-sales work at no charge, and there was a whole raft of services work that could have been charged for, and we helped them actually define those services and therefore write a number attributed to that work. We've subsequently done, strategy work for them, and we're helping in a whole raft of different ways. But it depends a lot on what the business is wanting to achieve. But revenue seems to be where we're playing most at the minute. And then we've got a couple of businesses coming in stream that have been previously funded by government in the UK. The government won't be funding over the next few years, and they need to become commercial. They need to look at the value proposition. They need to look at the competition, and they need to pivot entirely from, receiving money from a government department, and in some cases need to actually build a sales function, build a marketing function, get out and, and start selling this stuff.
Okay, that's super interesting. So you're saying as well, you kind of extract revenue drivers or revenue streams from business, from operating procedures that haven't been done before. So you've got you look at a business, it's maybe performing certain operations, maybe it has a strategy which it's currently following, which is charging for certain things, but you look at it from a holistic level and think, oh, maybe, you've identified an area where you could charge for that and make it monetize that. Okay. And is that a struggle? Yeah. Is that a struggle sometimes? Because I can imagine if like the core kind of values of the business or, why the business was built was to focus on something. And then I can imagine if you're changing it a little, do founders sometimes struggle with that? Like, what's the process there?
I think it was more a recognition that they knew they were leaving something on the table, but they weren't sure how to make that a reality. No, we haven't found that to be a struggle. Another example of work we've done in a similar space is a 12-year-old technology business, SaaS-based business, selling into the NHS in the UK. And no longer is the NHS funded to actually buy that software. However, they are funded to deliver that outcome. So by pivoting that SaaS-based business to a consultancy, there's a pot of money ready and waiting to buy these services. And so it's just looking at the problem the other way around and saying, can we solve this same a different way and therefore generate revenue?
That sounds like a really interesting case study, especially if the SaaS business had a high concentration of NHS as its customer and that revenue from NHS was dependent on government funding. That SaaS business still had this product, which was fantastic, and then it kind of needed to diversify its clients away from NHS or that particular client.
It's more, the client base remains the same, NHS, but the way the NHS is buying services means it's no longer buying the software in that way, but it still needs to deliver the outcome. So just looking at it from that business perspective the other way around means we can, help them reframe and pivot from a SaaS to a consultancy play, deliver the outcome using the same technology, and therefore solve the problem and increase revenue and profit in the process.
Oh, okay, cool. No, that's a really interesting case study as well. Okay, so I think you touched on it a bit already, but maybe you could talk about like a typical engagement step by step from A to Z with Grafter, or if someone's looking to scale.
Yeah, of course. I think we're still looking for that typical engagement, Dom. But in an ideal world, how it would happen is we offer something called a constancy service, which is a combination of coaching and consultancy for the first 6 months, straight into the founder. And that is about building the relationship, but it's also about having a kind of managing director in your pocket. And from there, we would then sit alongside a business for up to a 6-month period. We would then move that client into a grow and scale service, which starts with that business 360. We would agree some outcomes and we would deliver them over a 6 to 12 month period. Ultimately, what we would like to do is drive that customer then through an exit. We've only been running for 12 months, so we haven't yet gone the whole way through all of our processes. Sure. The reality is we often find clients are coming in at various touch points. So they could come in at constancy or they could come in at grow and scale. And in the case of the two that we've helped exit, they came in all the way at the end, at the 8-figure exit bit, and said, can you sit alongside and help us do the transaction?
Okay, that's understood. That's clear. Thank you. In terms of more financial and operational benchmarks, so during your process that you just spoke about, what are I guess of course it changes for each business, right? And it depends on the exit they're looking for and it depends on the acquirer. So you don't have to, of course, answer the value, but more what are the financial and operational benchmarks or metrics that you're really focusing on for, a business?
So I think depending upon what the founder is looking to achieve from an exit perspective really drives that activity. And a lot of the time, some founders will have a number in their head, but equally, plenty of us are driven by wanting to go and do again or wanting to do something very different. So from a kind of financial valuation perspective, the market, and you'll probably know it better than I, Dom, is incredibly fluid. We've seen even in healthcare in the last 12 months in the UK, multiples of healthcare consultancies. When I sold my last business, we sold at an 8 times multiplier. And yet in the UK market now, a consultancy in healthcare would be probably 3, at top end 3.5, 4, if that EBITDA was over $1 million. So it depends an awful lot on the individual as to what they're looking to do. Yeah, it's interesting though, because for the last 12 months, we've really doubled down on grow and scale. And in the last 4 weeks, we've got a couple of existing clients that have been approached about doing transactions. So I wonder whether there's more liquidity and things are starting to hot up again at the minute. But we're often finding very much personal choice.
Yeah, I'm finding in the last 3 months, I'd say, a lot more deal activity, kind of a lot more conversations happening, financing being less of an issue, more confidence, and I think that's certainly driving multiples. I mean, not a whole lot, but I would say it bottomed out probably 6 to 12 months ago. And that's, I mean, I'm not sure if that's in line with, what everyone's saying in all the kind of macroeconomic reports. But, from someone who's on the ground and dealing with, deals every day, I'm certainly seeing that confidence from acquirers. And I think it's really important, what you raised there. It really depends on the goal of the founder and kind of working backwards. And that's something I stress as well when I'm helping my clients prepare to exit. It's figuring out what is your goal, what do you want to end with, and what's the path to that, and then determining what those metrics would be based on market multiples to hit there. Of course, different businesses have different metrics to focus on, and that's basically obvious because you have different business models, of course.
Yeah, it's interesting, I think, Dom, that does align with what we're seeing from a liquidity perspective in way of transactions and deal and movement. I think the reality is, from a macroeconomic perspective, there's still an element of doom and gloom. From a UK perspective, we've got an election that will kick off at some point in the next few months. But I'm not entirely buying it being a bit more at the coalface, because we're seeing more movement. We're seeing more interest in wanting to make acquisitions. We're seeing businesses continue to grow. And so, I think what we're hearing in the press and, what happened in reality are often two distinctly different things.
Yeah, exactly. Now, kind of a question from my side as well. It's really important to kind of learn about kind of lessons learned and not mistakes, but lessons learned. So, what are some of the important lessons that you've learned from scaling? I mean, I think before actually you mentioned on your exit, you said it was not the best, let's say, experience. So what are some lessons that you learned from the exit? What are some lessons from your personal exit, I should say? What are some lessons learned from scaling businesses that you've seen? I think it's a great way to kind of share these lessons learned for people to learn from.
Yeah, of course. So I guess the biggest lesson for me with the exit process is I was out of running my business for probably a 6-month period, and I hadn't legislated for that. I hadn't understood that my eye was going to be off the ball from a business development perspective for quite that magnitude. So there was some learning for me there in way of, if I was doing another transaction, would I have an advisor sitting alongside to help me more? Probably. I didn't have that. I mean, I had a lawyer last time. We didn't have corporate finance. So I think there's a bit of learning there. My eye was off the ball and focused on trying to do the exit and that transaction, but that had a very, definitive impact in new business generation. I think the other bit that I really, really struggled with after I did the exit was there is no downtime between doing the deal and going straight into chasing a new number for the new buyer as part of the earnout. And I found that bit really, really hard. And it's not that I'm not up for working hard, but it is, you're doing two jobs for 6 months on the run up to doing the deal. You do the deal, and then it is like foot to the floor trying to hit another number. And that bit I found that there's got to be a better way to do it, would be my 2 pennies worth. I have no idea what the better way is. I've got no solution to that, but I found that very tricky. So they're probably my kind of key learnings from. Actually, there's one more. My other key learning is I think if you're wired, like many entrepreneurs are, your ability to sit still is impacted a little. So I found after I did the transaction, I had a grand plan for 6 months off. I managed to condense that into 3 months, then found myself out in Ukraine helping out because I just needed to be doing something. And so for me, understanding me a little bit better was definitely part of that journey as well.
That's super helpful, especially for entrepreneurs who are definitely eager and like juggling a lot of balls at a time, let's say. Okay. Yeah, I think the earnout comment is interesting. One of the hairier topics in a deal structure. And it's really important to define black and white what the earnout is, what is the calculation, what the scope of work is from your side, what's the scope of work from the potential acquirer's side. It can be very difficult to often execute if you don't have those guiding rails and definitions in place. And it's a lot easier to talk about than actually execute, of course. But it's certainly a hairy topic. We should probably actually dedicate a session or an episode on it, because out of all the negotiations that I do personally, it's one that's often skipped over a lot for such an important piece. Sometimes the seller can get a little impatient and just kind of want to get the deal done or move on to next topics. But it's so important to really kind of take a step back and really understand and do your due diligence on the buyer as well. Do the due diligence on what portfolio companies they've bought previously, what businesses they've acquired where they actually did pay out the full earnout or most of the earnout. As a seller, it's really important to do your due diligence on the buyer just as much as they do the due diligence on you.
I think that is really solid advice, Tom. However, I think, landscapes change, strategies change, and
of course, yeah.
And it's hard because it's people. And so, there's definitely some complexity. And we spent a lot of time talking
100%.
about earnout, but still, still found that probably one of the more complex parts of the SPA.
For sure. And that's why I said it's easier to talk about than actually execute and do, because there are so many unknowns that can pop up. So it's an interesting topic for sure. Now I want to know a bit about, what excites you, let's say in the next, 6 to 12 months. I wouldn't say 2 years. I think that's far too, in this day and age, it's far too hard to kind of predict 2 years. But what really excites you in the next 6 to 12 months in terms of technology or scaling or, businesses?
I think that's a great question, Dom. I think the bit that is exciting me is the potential around things like AI. Now, I know everybody thinks that, they've got an AI proposition and it can happen overnight. But I do think that AI from a consultancy perspective is going to be very compelling. So, if you argue, that you start to build some of the services that we've already created, great example, 8-Figure Exit has a 400-page playbook, hours and hours of content that supports that service. That embedded into an AI proposition is going to be very interesting. So I think there's more to come for AI, but I think we are right at the early stages. And I really don't think we fully understand what we're working with at the minute either, which is a combination of exciting and terrifying. I think the other bit for me personally is the ability to build a business that could operate fully remote. So I find that super exciting. I don't want to be contained in any capacity, but I don't want to be contained in the UK with this bloody awful weather. And so my rationale with building the Grafter was very much about it being remote first. And I think just bringing that to life and making that a reality is going to be very exciting. We have people working with us at the minute who are based in Barbados, based in Thailand, and proving that concept for me will be very exciting. And I guess the other bit is some of the client work that we're working with in the AI space. We're doing some projects in healthcare, in AI. We're also helping raise money, which I've never done before for a client. So the learning opportunity alongside building a business, running a business. I mean, for some people that would sound horrific. For me, I find that exciting. Lots of spinning of plates and lots of moving parts.
Yeah. No, fantastic. And I guess the last question we always ask our guests, what's the most recent book you've read or podcast you've listened to which made you think, wow, that's super interesting? It doesn't have to be business related, by the way. It can also be life related or fiction related.
So the most recent podcast that I've been listening to is one about serial killers. And I will probably show you my thoughts on that one, actually, Dom.
A serial killer podcast, to be honest.
I don't mind a serial killer either. No. It's a strange fascination. But I guess the most relevant book that I've been reading relates to community. Are you familiar with the book? Sorry, I've now got the Plea. Can you hear that this end?
Yeah, it's a serial killer.
They have. Okay.
No worries.
All right, so do you want me to restart from the serial? Are you going to re-ask the question or do I just go?
Thank you, Rachel. Some really good insights. Our last question that we always ask our guests is, what's the most interesting book you've read recently or podcast you've listened to recently where it made you go, wow, super interesting, or you got something really cool out of that?
So there's a couple of podcasts that I've been listening to recently. The first one is about serial killers, so I won't focus on that, albeit it is fast relevant for business. The podcast that I've been listening to is Coaching Outdoors, and it's the concept of if you are coaching a client, whether you're together or you are in different locations, can you take that conversation outdoors into the countryside, fresh air, and what dimension is that bringing to a coaching session? Does it allow for a more creative discussion? Do clients that you're working with feel more or less constrained? So Coaching Outdoors is the other podcast I'm listening to at the minute, which for somebody that spends probably 2 days a week coaching clients, it's a fascinating listen. Maybe it's selfish, Dom, because I'd like to be walking and talking, getting the steps in at the same time. Who knows? Efficiency,
I don't mind that. I actually like doing kind of meetings with people and walking at the same time, or if I have a voice call, definitely love walking when it's not raining here, to be honest. But look, Rachel, I just want to thank you again for your time. I know you're really busy, and I think there's some really nice nuggets of information for our listeners. So thank you again. Enjoy the rest of your afternoon.
My pleasure. Thanks very much for having me on. Thanks, Dom.